Hello traders, this is going to be a DAX recap video, first one in the 2019, and it is for Wednesday, January the 2nd. In front of us is the updated chart with adjusted support and resistance zones that was posted before the open. And in the pre-market, basically as soon as the future session started, DAX was already here on our major resistance zone, and it is the third day in a row that DAX really tags the important resistance zones in the pre-market. And immediately after that, it took less than 2.5 hours, it already fell like 200 points. So that was the situation in the pre-market. In my morning notes, I said that this DAX is trading inside this range, 400 points range from here to here. This is the important zone, which is in the middle, basically of this bigger range. And after the open, how the market will going to react around this level is going to help us to determine our intraday bias. Of course, the other important thing is if market starts to move with good momentum and speed, do not fade first zones in the way, because they could be, run over. Now let's go back to the charts, and let's switch right to the 1 minute chart to observe the price action that we had. So this was the start of the pre-market session here, and as we can see, DAX immediately started going lower without any pullback whatsoever, and it tagged this zone around 500 level at 3:40 a.m. So basically for less than 2.5 hours it already fell 200 points. It already filled entire of his daily range, average daily range. ATR, current ATR is 217 points, and it had that already at 330. So after that it's just was balancing here, making small bounces from this area. And when you see just this, let's say now the DAX is going to open and you are seeing this drop, fast drop, then balancing, just going sideways. This here, this balance, this range, this basically you could say that it is a horizontal bear flag, or whatever you want to call it. It is a continuation pattern. So you had a fast drop, good drop, 200 points drop, after which you don't have a pullback at all. You just have this kind of balancing activity. That means it is most likely it's going to continue. And with that idea, here comes our first trading opportunity, and it is to short this DAX right at the open with our stop above this range. So when DAX opened, it was inside this zone. So you're basically shorting this zone directly with your stop above this, or if you are missed this, as I missed it also, you could use this pullback towards the pre-market low and short here, because losing pre-market low opens door for more, for more downside. And as I said in my pre-market notes, if you see good momentum, and this is good momentum, look in 3 minutes from like 485 to 440, it dropped 45 points in 3 minutes. That is a good momentum, and that tells you that you really shouldn't fade this zone. And this is a short that it could go to the next zone, and inside next zone we had this gap from December the 27th. In my notes I said that the price is going to open with one gap above, which was the prior cash close, and one gap below, and that most likely is one of those that are going to get filled. But today we have some kind of outlier day where both of those gaps could be filled, and this didn't get filled just by 7 or 8 points. So this here short with entry here right after the open, near the zone, at the zone, or this with the pullback toward the pre-market low, closing is near this next zone. Closing is here. Now this here could also be a long trade. For this long trade, you should really think like this. Okay, we had so far more than 300 points to the downside. There is no guarantee that this could not, continue to here. Nobody's guaranteed that. This is a risk. From here, if you want to fade this gap, you should be slightly above it. I was slightly above it also, but I didn't get a feel for like 2 points. And later I didn't want to chase it, and it was a mistake. So if you get really here after more than 300 points move, then you should also not close your trade right on this zone, especially because it was provided here just a small reaction and price went right through it. So logical target for this long could be here around pre-market low, and now we can observe that this price action after this bounce was really in a bullish manner, stair stepping, just stairs, making stairs and leaning on these prior highs. You see, reaction from pre-market low, leaning on the prior high. Now going above the pre-market low, leaning on the pre-market low here. So if you are shorting this zone here, which is nothing to no mistake here, why not short this? Why not short this range here? But when you see this activity that the price really doesn't want to go again below the pre-market low, then you should really think about protecting yourself, and that this could be, that maybe this could be a low of the day. Now in this time it is like 10:30, so it's pretty early in the session. But when you're seeing this, you should, if the market is going to be rejected from this zone and from this range, it should be really swift rejection, not like this testing and spending a lot of time here and so on. This here, going back inside zone, it means that market isn't really weak, that it's really didn't weak enough, I'm sorry. So when you see this move and this horizontal sideways activity and this another move to the downside, in order for this to continue, we need selling pressure, we need momentum, and if it is not there, then market will go up again. As simple as that. No sellers willing to push the price lower. There was their chance. Market opened here in regular trading hours, and they should defend it, but instead of that they just make this like 15 or 20 points reaction. After that, price went through this zone, and now here we have a confluence of three things here on this next zone. We have a confluence of the zone, of the prior cash close, and also we can draw a fib of this entire move and observe that this is a halfback here. So if you are trading that wasn't really a walk in the park, this trade, because it's keep testing. It was testing and testing. If you are just move this range like here, then you can observe it, test it, this top of the range here, and went back to the cash close, then again, and so on. And for the really patient traders, this short here could provide additional 40 points to this next zone. This was the logical place for you to close this trade. And when you observe this activity, you should ask yourself, okay, this is the zone, this is important zone, know that. Can it be something else here? And if you draw fib again of this move, then you will observe that that is another halfback here, and 38.2 in the middle of the zone. So this was additional reasons why to close short here and maybe to go long. Again, because price made this drop through the zone and then it's get back and then retested the zone from the other side. Now it could go even higher. So this was the move. Down through the zone, up through the zone, retest of the zone and going higher. From here, again, logical places to go to close this trade, this long trade in this case, it would be here, near this zone, and for very patient traders, here. And that was basically it for today's session. In bigger picture, really nothing has changed much. When you see S&P chart, S&P today looks like so far like some kind of doji daily candle. DAX looks pretty much the same. But what is the point of this picture, large time frame picture? It's going to be a change only if they are able to move the price above 25.20 on the S&P. They are still here on this first fib retracement, and we can still expect to see a test of these lows, maybe some kind of double bottom and then a move up, or even lower lows. As usual, that is something that is usually happen with these big drops. It is almost never a weak kind of reversal. It is usually, we could expect this here, but that doesn't mean that every day is going to be to the downside and that we are going just shorting every possible level. Not on DAX, which is weaker than S&P, and not on the S&P also. As we can see on this chart, every zone played some kind of role today, and we should really be careful in this kind of environment when you couldn't possibly know in advance what kind of daily range could be. Sure, average range is like 217 points, but today was 300, and a few days ago it was 400, and that was 150. That is called the average. When you do the average is like 217. So where the range is really exhausted, you don't know that in advance, but you can use zones and good places to try your best there and to be protective. As you can see, this here, this was the ideal long opportunity, but it wasn't really easy to catch. So that is all from me for this video. I wish you good evening and good trading.